Welcome back to the exchange. Shares of clothing company Kontoor Brands hitting a new record high today after they beat first quarter profit expectations. Those shares are up nearly 11% so far this afternoon, trading just below their intraday high of $69.69. Now, this is the parent company of Wrangler and Lee brands. It also raised its full year outlook, citing confidence in brand investments despite a tougher backdrop. Still, though, Kontoor saw revenue slide 5% this past quarter and says it could see a 1% decline for the full year of 2024. Let's now dive further into those results with Kontoor Brands CEO Scott Baxter. Scott, thank you very much for being with us here. And I see you're wearing the product. I do see the denim on there right now. Talk to us about what's driving this record result here. Denim is a big deal. It's basically you and Levi Strauss, the brands that everybody knows and understands. What is it about denim that makes it such a good business right now?
You know, it's the casualization, and thanks for having me on, Don. It's the casualization of what's happening around the world right now as we've all come back to work the last year and a half. And people are casual, denim's acceptable everywhere you go, and we make really great product. And on top of that, we're in other categories, too, that are driving our success, like outdoors and T-shirts and things like that.
Now, this is a denim, a denim dynamic, if you will, that has been brewing for quite some time now, and arguably maybe skyrocketed a little bit because of the pandemic and everything else that's been going on. What exactly is that casualization trend going to look like in the coming years? How much does it have in terms of momentum? And how exactly do you capitalize on it with Lee and Wrangler versus other denim brands out there?
Well, I think it's got a long way to go. And the key, though, is you've got to stay ahead of your consumer and really think about what they're looking for. So you've got to have a strong insights business, which we do, embedded in our culture. I'll give you a great example of that. Our Lee consumer, the male Lee consumer, really indexes to golf, indexes to watching golf and playing golf. So we just kicked off a whole Lee golf line here this past month, and it's done exceptionally well right out of the gate. But I think it's got a lot of legs. It's got a lot of legs globally, but it's not just denim for a company like us. Like I mentioned, it's tops, it's outdoor, it's T-shirts, it's all types of different product that go ahead and make up the full and entire portfolio that keeps us rolling. And we think it's got a lot of momentum and a lot of legs. And I think part of that, too, has to do with the brand heat. We've had some really successful collaborations and collections. We've got our Lainey Wilson collection coming out here at the end of the year, which is really going to be dynamite. We're really looking forward to it. And she's helped us design that because she has a real passion for apparel. So that type of brand heat and bringing those things to the market help keep us in the forefront of what our consumers are looking for.
Those are a lot of different silos you're talking about. You're talking about Lainey Wilson. You're talking about rodeos. You're talking about a Yellowstone watching audience. You just mentioned at the same time a new golf-focused line for Lee. Where exactly is that growth coming from as you look at these different verticals, these different silos? Where do you see the most growth coming from?
Well, I think North America, our biggest market, will be a real strong driver for us going forward. We have some really nice collections coming out here. Our momentum here is extremely strong. We've got smaller businesses in Europe and Asia, but they're coming on really nicely. Asia and China have come out of the pandemic very nicely, so we're positioning that business to do really well. We're investing in that business fairly significantly, too. Europe has been a little bit more difficult here the last year or two, and we're hoping that that comes out here towards the end of the year. We do see some green shoots. But North America being our biggest market is really important for us, and us driving our core brands, Lee and Wrangler, in that market really carry the momentum for us going forward.
One of the things that, I mentioned Levi's before, it's only because they're a bigger in terms of market cap than you guys are. They also trade at a premium valuation to where you guys are as well. They have about 3 or 4 percentage or valuation points in terms of price to earnings multiple next year higher than you. They've also emphasized their direct to consumer verticals in the past and how that's a strength of their operation. Can you take us through what your direct to consumer strategy is? Is it a bigger part of your business, or is it mostly still department stores and other stores that are selling your product?
Yeah, I certainly can. Actually, it's the biggest opportunity for us throughout the globe, really, because we were more of a wholesale business when we got spun out 5 years ago. And now we've got this platform from a D2C, both hard physical stores and also e-commerce Both are smaller businesses relative to our peer set, and that just creates a bigger opportunity. So we've been investing pretty heavily in both. This coming year, we're going to be building stores in North America. We're going to be building stores in Asia. We're going to be refurbishing a ton of stores in China, which is really significant. I talked about that on our call this morning. And then our e-commerce platforms have grown significantly here over the last 5 years. But the key is they still have a lot of room to grow because we still are under-indexed in those areas. And that helps us to talk and communicate better with the consumer when we have that one-on-one relationship from an e-com or direct-to-consumer store business.
And Scott, I'd be remiss if I didn't ask one final question of you because you are such a consumer-focused company. I'd like your take as to what you think the state of the American consumer is as you see it. We've been seeing some mixed signals in this market. It seems as though this is maybe a transitory phase about going between consumer strength to relative weakness. Is the American consumer strong?
The American consumer is in fairly good shape. I do believe it's going to get better. I think we'll see inflation kind of ebb here a little bit towards the end of the year and going into next year. Our folks and our consumers are still working, which is important. There's been a little wage inflation, which is important. I think you set up that dynamic right there, and I think things look pretty good for 25. In addition to the fact someone like us, the bulk of our products are sold between $20 and $40, and they're used for work and recreation, so people need our product. And that bodes really well for us when you can buy a trusted brand at a value price like Wrangler and Lee.
All right.